All right, we're going to dive into current assets in more detail. So current assets are assets expected to be converted to cash, sold, or used in the business within 1 year or one operating cycle, whichever is longer. So you're going to hear about the operating cycle a lot. So essentially the operating cycle of the business, let's just say hypothetically in our water bottle business where we buy raw materials, produce the water bottles and sell it to our customers. So the operating cycle will be from the point that we actually buy the raw materials like the plastic to the point where we actually collect from our end customers the actual cash. However, when it comes to current assets and current liabilities, I always tell my students to think about it as less than 1 year, just to kind of simplify it within their minds, right? So this a current asset is an asset that is due within 1 year. So once again, operating cycle is the average time it takes to go from cash to cash in producing revenue. We just talked about that. So assets are listed in the order of liquidity. Liquidity is very important. Liquidity is essentially what we can convert to cash the fastest. So the common order of liquidity is going to be cash, accounts receivable, supplies, inventory, and prepaid expenses. Depending on the actual company, you could also even see a reverse order of liquidity. So in that case, prepaid expenses will go first, then inventory goes, then supplies, then accounts receivable, then cash. So if you see that, it could happen. So that, as you can see, the inconsistencies in accounting are very real, but I'll keep pointing them out to you as we go. So once again, the examples we kind of already talked about. So I want to actually talk about prepaid expenses. So a prepaid expense is essentially an expense that we prepay for in advance. So let's just say hypothetically that we have to pay for insurance upfront for the entire year. So in this case, now the insurance companies owes us the service in the future. That's the future benefit. So that's why prepaid expense is an asset. As time goes on, we're actually going to incur that actual expense. So in that case, we're going to increase our expenses and then decrease our prepaid expenses as time goes on throughout the year.